Hi everyone, welcome back to the online training course. We are excited to have you today. Last video we spent some time discussing the current carbon stocks in the US and understanding baselines. Today we will be building on those concepts to understand the value of carbon. A carbon credit is 1 ton of carbon dioxide emissions avoided or reduced. So it's a one for one kind of reference. One credit for 1 ton of emissions reductions. And how we assign value to that credit can be done in two different ways. There is, of course, the market value. And so this is in reference to value in trade. So when that carbon credit is generated, in this case by a forest owner who has changed their management activities to enhance carbon storage on the landscape. So that carbon credit can be sold to a buyer and the buyer is buying that credit so that they can offset their carbon footprint. So they want to reduce their carbon footprint for a lot of reasons, which we will also get it into the future. So that value in trade mainly occurs in two kinds of market. There is a voluntary market and a compliance market. The voluntary market is open. I like to call it a handshake market because two people can come together. A forest owner and a corporation can come together and shake hands and make deals about how many carbon credits will be generated and sold to the buyer. But a lot of trade actually occurs on some sort of trade platform. There are some brokers that are involved and they can facilitate that trade. A huge growing area of the voluntary market is the finance side of collecting, buying, selling, and trading carbon credits. Compliance markets are a little different because they are tied to emission reduction goals within the state or the region in which the market is operating. So, right now, family forest lands are not part of compliance markets just because the bar to get into the carbon offset projects that qualify to be traded on compliance markets is really, really high. So, most of the trading for family forest lands is done on the voluntary market, and I have some ranges here for market value, and this is across the voluntary and the compliance market, but it's somewhere between $3 and $30 per metric ton. And that's referencing those nature-based offset projects which contain forest. The compliance markets are more valuable. They are closer towards that $30, where the voluntary market is a little closer to 8, 9, or $10. But still, there is a lot of variation, and that variation is determined not only by the markets that they are sold on, but also by the individual project that generates the carbon credit. And we are going to get into what do these projects look like, what determines the value of the project, and the credits that come from that project in our future models. The social value of carbon is something that is pretty important to pay attention to. This is said by policy analysts mostly in Washington, D.C., and this is how the government can determine whether or not a policy is achieving its goals. They look at the social benefit of whatever action they are taking. So, in this case, the Biden administration has set the social value of carbon emissions reduction at $51 per metric ton, and that $51 represent the cost avoided to society because of climate change. Every 1 ton reduction in emissions provides $51 of benefit to society related to employment, health, and other factors that are considered important to societal well-being. I have seen numbers that are higher than this, up to even $200 per metric ton. But $51 is what is being set right now as the target at which carbon is being valued. And it's an indicator on the market side. When it gets to be about $51 per ton, then we are approximating a point where carbon is being traded in a way that provides societal benefits. So I would like to use it as a reference point of where we should go in the future. Because right now, the market value of carbon offsets is low in terms of achieving societal benefits, but it is also relatively low for getting landowners interested in carbon programs as well. So, what is the market value of forest carbon right now on family forest lands? Right now, the dominant strategy for storing carbon is delaying harvest. Delaying harvest on family forest lands has a market value of around $16 per acre, and that's assuming that it's being sold for $8 a metric ton on the voluntary market. Now, that $16 does not go right to the landowner, right? There is a lot of middlemen there, and so actually the payments to landowners are closer to about $10 per acre. So there is the project developer who is helping manage the carbon in terms of monitoring and doing stand inventories and also following specific protocols in order to quantify how much additional carbon storage has occurred and then generating the carbon credit. And when they generate that carbon credit, it usually goes through a process of being approved by external reviewers. And so there is a lot of steps that are involved that, of course, requires some cost on the part of those actors. So the market value of carbon and then what a landowner actually gets paid comes down to the project itself, who the project developer is, what they have created as far as their business plan, and because they are all looking to gain some revenues from this investment, and also outside investors who help start the project are looking some returns. So it's hard to tell landowners, hey, you should get paid this much because the market value has changed in this way. It's not as transparent because it's working at a project level and people are kind of making bids on behalf of the landowners, and that reduces transparency. That being said, we will get into transparency in the future. Also, different project developers will create opportunities for landowners to be involved in multiple ways. So they can be directly involved as a decider or they can be more passively involved. And these landowners, they just sort of engage in a passive way. They just sign a contract and then they just don't harvest, and that's about all they do. They don't do any monitoring, they don't do stand inventory, they don't work as a broker or cast bids. In some cases, they get paid a flat rate. Sometimes they negotiate, so it depends on the project developer and how much they allow a landowner to engage in the process. And different landowners want to engage at different levels anyway. So, having different types of projects around is actually a good thing because it increases the chance that a landowner will find a project that is going to be a good fit for them in terms of how much they want to be involved. Okay, so what about the social value of carbon? You would use this more in the context of understanding the impact of development in your area or any sort of laws that affect harvesting activities. So that $51 per metric ton, if we apply that to 1 acre of family forest lands on average, then keeping that forest as forest has a social value of $4,218 an acre. So that's pretty significant. It's not competitive with land use conversion to development in some urbanizing areas, but it is a significant value. And then 1 year of tree growth is about $102 per acre. So this is the benefit to society. If you are working with local decision makers, these are the kind of numbers that they may be interested in. Now, now what does this mean for family forest owners? Forests managed for timber are among the most valuable for carbon storage due to the strong link between woody biomass and carbon. These forests often have high stand density and existing management plans, making it easier to set baselines and assess delayed harvest scenarios. In contrast, degraded forests, about a third of the Northeast, don't meet carbon market standards and currently have little opportunity to participate. Forests with a history of active timber management are more attractive to carbon project developers. If carbon prices rise to around $55 per ton, they could compete with timber revenues. But current payments, about $10 per acre per year, are not enough to motivate any landowners. Long term commitments, like 20 plus years, also deter participation, especially when landowner may not live to see the returns. Each landowner must weigh the risk and rewards. Carbon incentives can raise land value and encourage greater investment in forest management, which benefits both timber production and carbon storage. This, in turn, helps reduce the risk of converting forest to other land uses. Market trends suggest that softwood prices may increase, while pulpwood prices decline as more stand shifts toward saw timber to maintain value amid reduced harvest for carbon storage. These dynamics also affect sawmills and the broader wood products industry, which relies heavily on family forest. While carbon markets introduce some disruption, a credible risk of harvest must remain for carbon storage to be considered additional. So here is overall summary. Carbon markets are currently not competitive with timber markets, but some landowners are interested in waiting a little bit longer to harvest and get some revenues. Current carbon prices are less than the social value of mitigating climate change. So if you want to speak about this meaningfully in your area, to the landowners and the clients you work with, pay attention to forest health protection practices because that's going to protect carbon stocks, and you should try to promote that in your extension or education programs. And then understand what are the wood products that are coming from your client's forest, how is that part of your local economy, and how can legacy planning along with stewardship practices help enhance carbon storage on family forest land. So this should be part of a general approach to carbon management goal so that they can then participate in carbon market if they qualify for the programs that are available. Here we have some reflection questions for you to think about when you are preparing to engage with landowners. The first thing is to try to understand the average prices of carbon payments in your region because this may vary based on where you live. The other thing to consider is how do landowner clients think about value when it comes to forest. What values are they paying attention to? And this allows you to focus on if the landowner is paying more attention to the economic or social benefits of the program. Thank you all for watching this module. If you are watching this video on YouTube and you want more content like this, we encourage you to join our free online course. You can find information about the course and access all of our resources on FOSI webpage. If you are taking the online course, make sure to fill out the evaluation survey if you want credits. There is a comprehension check and optional activity in the classroom as well as a question and answer forum. See you next time.